Hey everyone, I just realized that I've been updating investors on my top 10 stocks to buy, my top growth stocks, my top dividend stocks. All the while, I've forgotten to update you all on how my top stock to avoid is doing. Remember to start the year, I highlighted one stock I thought every investor should avoid for 2024. Well, in this video, I'll update what I think the top stock to avoid is and how that recommendation is doing so far year to date. So follow along. Let's take a look at this stock that I felt was not going to do well this year, and I'll explain why I think it's the case. And it's artificial intelligence. AI is destroying this company, and it's trying to bounce back, and I'll show you what it's trying to do, but I don't know if it's going to work. So let's check it out.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right. So the company that I warned investors to avoid for 2024 was Chegg. Chegg was the top stock I said investors should avoid. Now you might be surprised that the top stock I recommended to avoid is Chegg. Considering how negative I've been with the EV industry, you would have thought I would have picked one of the EV stocks as one to avoid, but I thought Chegg was in even worse shape than some of these EV stocks that I felt were also in really bad shape. And you could see here so far I was right to be cautious about Chegg stock. It's already down 34.42% to start the year, while the S&P 500 is up roughly double digits. So it's significantly underperformed the market. And the primary reason is AI and large language models like ChatGPT. So here I have an example on ChatGPT of a typical question that a college student might go on Chegg to answer. See, Chegg helps college students with their homeworks and their studies, and it was an incredible business because it had millions of pieces of proprietary content that helped students with their studies. And so a question like, how do you calculate the net profit margin, was a really helpful explanation that you could find on Chegg, but now you could get it on ChatGPT. Here I've asked ChatGPT, how do you calculate the net profit margin? And it's given me a really nice explanation of what the net profit margin is, how to calculate it, describing the elements of this calculation, and really giving me a good explanation from a student's perspective to understand this critical financial metric. Previously, you would have had to, well, you wouldn't have had to go to Chegg. There are other options, but Chegg was one of the choices of where a student would go to learn things like this, where you're studying for a class and you come up upon something like the net profit margin and you want to understand it more clearly. You want to get an explanation of how to calculate it, and you could get it on Chegg. But now you could get it on ChatGPT. The big difference is ChatGPT is free. You can get the free version, which I have here, and get the answers to your questions, whereas with Chegg you have to pay a monthly fee between $15 and $20 a month depending on the type of your subscription. So with the launch of ChatGPT, it's made it very difficult for Chegg to convince students that they are worth paying for when they can get this very similar information on ChatGPT and other large language models for free. And you can see the impacts already starting with Chegg. So for 2023, their revenues fell 7% year over year. And they took a $38 million one-time content and related asset charge of $38.2 million. And I think this might even happen again where they need to write down these assets even further, because previously, before ChatGPT, these assets that Chegg had, let me back up a little bit and explain to you what assets Chegg had. So one of the things students got access to when they join Chegg is that they can ask a number of questions every month that then is answered by a subject matter expert. So a student would ask a question, and Chegg employs a number of subject matter experts, like, for example, a professor in finance like myself. They could hire someone like myself to go on there and answer questions that are asked by students. Then that question and answer is made public for all of Chegg's members to see. So there's a question asked by a student that's answered by an expert, and then that question and answer becomes public for all Chegg members to see. And Chegg had amassed millions of those types of questions and answers. And that was valuable assets for Chegg, because now new students that come online, they're going to ask similar questions, but Chegg already had that question answered. And so they wouldn't have to pay for it to be answered again. So that's a really valuable business model, or it was before the launch of ChatGPT. And it attracted, now they still have 7.7 million subscribers. It's down 6% year over year as people started canceling, but they still have 7.7 million subscribers. And so students found this very valuable. In fact, before ChatGPT, on the campus that I teach at, it wasn't rare. It's very common to see students with their screens open to the Chegg website learning while they're studying, right? Nowadays, when I'm on campus, I see ChatGPT open on most computers. I rarely see Chegg open on any computers when I'm walking around campus. So the switch has been quick, and Chegg is already seeing the decrease in users, but they're not just sitting back and letting this happen. They're taking steps to counter ChatGPT. So management said that they introduced automated answers in late December, and they've seen a significant increase in the number of students asking new questions, as well as the number of questions per student. So engagement with existing members is increasing. Although they don't say anything about new members, they're just saying engagement with existing members increased. In January, Chegg's automated answers delivered more than 2.2 million solutions, 3 times the number of new questions asked and answered this time last year. So engagement is increasing with this new service. That's good news. Now, they also expect to launch the rest of their proprietary models by the end of the first quarter. And they believe that's what Chegg can uniquely do for students. And it's a huge competitive advantage over generic AI models. So here's where Chegg is going to try to focus on, is a student-centered large language model. So not a generic large language model, not a generic AI model, but just one that's focused on students. And Chegg believes that this will provide them an advantage because it'll be lower cost. The cost to serve will be lower. Right now, ChatGPT, it costs them computing power for every query that gets answered on the platform. So it's adding up the cost. If Chegg can answer questions at a lower cost, longer term, that might be the key to its survival. So management saying, as the hype of AI dies down, leaders in their verticals like Chegg are taking control of their own destiny by building their own models, which allows for higher quality and lower cost. As an example, the cost to answer a question using our own AI models is already more than 75% less expensive, and we believe it'll continue to decline over time. So Chegg smartly, prudently is bouncing back or hitting back at OpenAI and ChatGPT, launching their own models, trying to take back or keep that niche market that it has established, right? It's established its relationship with students, and it wants to keep that relationship with students. It wants to keep itself as one of the leaders in the education technology space. Now, longer term, that might work, because longer term, I don't think ChatGPT will remain free. Right now, students can access ChatGPT, the free version, and get their questions answered, as well as other AI models that are also free. Given the fact that the cost of computing is rising, I don't know if these AI models will remain free for everyone. I don't know if that will remain free. So if they start to charge a monthly access fee for OpenAI, ChatGPT, and others, that might give Chegg that competitive advantage that it needs to survive. However, for 2024, I don't think those developments are going to happen in time for Chegg to perform well in 2024, and that's why I've told investors that this is one stock that I would avoid, and it's the most prevalent stock that I would avoid in 2024, and so far it's down 34%. So if you followed that recommendation, you would have saved yourself 34% losses on your funds. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.